Arlene Castellano, a licensed realtor in the state of Massachusetts. BuyingMiCasa podcast is an informational platform for home buyers. The goal is to use social media to bring awareness to the public on the home buying process and its resources. And now, your host, David B. Faley.
Welcome to BuyingMiCasa. Today we have an honored guest, Mr. Brad Salerno from Guarantee Rate, and he is the Vice President of Mortgage Lending.
That's correct. You made that sound very fancy.
Of course it is fancy. You deserve
quite,
it, man.
Not quite.
After you all work all those years of doing mortgages,
yeah,
of course.
It's been a bit.
So, Brad, today I would like to have a conversation with you regarding the difference between a pre-qualification and a pre-approval.
Sure.
So before we start, Brad.
Yes, sir.
I would like for you to share how you got started into this business.
Oh, all right. How I got started in this business.
I know it's a long resume, but condense it for me.
It's been a while. 20, maybe almost 22 years ago. Straight out of college. Just had an opportunity and was introduced. Actually, my father said, "You got to meet this guy in the mortgage business." I probably wish I had never met that guy in the mortgage business, quite frankly. But it opened my eyes to the mortgage world. And so 22 years later, here I am. I've gone everything from starting off originating loans to running a mortgage division at a bank to back to actually what I really loved all along. Back to originating loans. So this is what I do. Yeah.
Give you an opportunity to meet and to work with people.
This is why I like it. So when I was in the back office type of stuff, it was killing me a little bit. I am a people person. I like to get out there. I like to help people. Love those first-time home buyers, and love to just interact with people as opposed to that background stuff where you're just running stuff and being the puppeteer. So that's what I do.
As much as I profess, I don't like people.
No.
I don't want to talk to people.
Yeah, all
right.
But
guess what I do?
I'm fond of you.
Well, guess what I do?
Yes, sir.
I talk to people and I get into like people.
Yeah, sure.
Yeah.
But
it is, I know there's a whole lot more to your experience in this mortgage industry. And
I've been around the block. We've known each other for several of those years, I think.
I know.
Actually, probably 18 of those years.
Yeah, just about that. Yeah. So it carries a lot of good joy seeing people closing.
Yeah.
Because remember, doing mortgages, the best part is going to the closing with those clients. Yeah. Nowadays, we don't go to the closing anymore.
We're not allowed right now.
We're not.
I tried pre-COVID. I tried to get out there as much as possible, which sometimes difficult to do. But with COVID, apparently I am not necessary at the closing table.
I know.
I'll get you there, but I am not necessary.
Yeah, that's a shame. I used to enjoy that.
Yeah.
But back to business.
Yes, sir.
There is I don't want to call it a myth. Probably a misconception, confusion. Mm-hmm. The difference between a pre-qualification and a pre-approval.
Okay.
Can you break it down for me?
Well, I think the difference really is the level at which somebody is really, you're going into somebody's history, that credit, the income, the employment, all those pieces. So, a traditional pre-qualification is really just like, all right, how much money do you say you make, right? How much money do you do you say you have in the bank? And then based upon that information, you may, numbers are run. It's like, you can afford about this much, right? That's what a pre-qualification really kind of is. It's just a very surface level view of an individual. So a pre-approval is that next step up. Right.
So wait. So the pre-qualification is based upon a conversation, is what they say. They're not verifying the documents.
Yep.
I remember
Reagan. He trust but verify.
Just verify. I love that, man. Listen, don't talk about Reagan. That's the only Republican that I like. Okay. That's the only Republican that I like.
We'll talk about it.
So
trust but verify. Yeah.
So the pre-approval is trust but verify.
The pre-approval, exactly. The pre-approval is that next step of, hey, I'm going to now get a copy of your pay stubs. I'm going to now get a copy of possibly your tax returns. I'm going to now get a copy of, obviously, your credit. I made, the
bank
W-2s,
statements,
the
W-2s.
bank statements, exactly. We're going to look through those bank statements. Do we have non-sufficient funds in there? Do we have, when we look at that pay stub, are the hours fluctuating to where you have something we might call, that we call variable income, meaning it's not just a salary or not
and the
just
reserves.
Exactly.
Before we get back to those details,
sure,
that is the difference. So with with a pre-qualification, they're not providing all those documents.
No,
you might have it
generally
over
not,
the phone.
yeah.
It would say, maybe a conversation would go like this. Hi, Brad. My name is David. I'd like to get pre-qualified for mortgages. How much I can qualify.
Sure.
I mean, what can you do for me, Brad? What do I need to do?
Yeah, and then that's just a very general conversation.
But no, you're gonna ask me the question. You're gonna ask me the question, so we
Sure.
can do like a
let's-
a mock pre-approval on the phone.
Yeah,
So
absolutely. So
ring, Brad. This is David.
David, how the heck are you, man?
Well, so all is well, and I would like to know.
Am I talking to you or am I talking? I was told by Nate to flirt with the crowd over here with the.
No, you flirt with this crowd here. This is the crowd you flirt with.
Hey.
No, you flirt with this crowd.
All right. So hey, man, that sounds great. Where you looking? We go over that stuff. We want to talk about the exciting stuff, but we're going to get into details. Where are you working right now? How long you've been working there?
So for the pre-qualification, it's just even if it is a hearsay, it's not verifiable. It's something that you may have a phone conversation, or you may be in front of a person. Well, I don't have my pay stubs right now. I don't have my bank statements. I don't want you to pull my credit now, but how much do you think I can pre-qualify for?
Sure.
And then what you would do in that case, you would ask them, well, tell me what you think you make.
Yeah.
Can you remember what is your gross is? How much you pay in debt? You remember your credit score? So, like you said, it's hearsay.
Sure.
So the pre-qualification
very
is
surface
hearsay.
level conversation, not verified, but a conversation that we're having about your history, your work history, your income history, employment history.
It's just a hearsay.
Hours history. Exactly.
Just a hearsay.
Yeah.
But for the pre-approval, now you're going to get in more of the details.
Oh, absolutely. We're doing a full inspection there. We're lifting up the hood, checking out that engine.
The whole thing.
Before you get a pre-approval letter, when you get a pre-approval letter, that really means that I have surety in the fact that you can get a loan, that you are financeable. And for me to have surety that you are financeable, I need to have the information available to me that is necessary to make that determination. Can you afford this house? Okay, great. So I need to know how long you've been working at a certain place, how much exactly you're making, which isn't always an easy thing. If somebody goes to work and they have a $50,000 salary, $100,000 salary, $70,000 salary, easy, no problem. That's easy to calculate.
One job, one salary, that's it.
Yeah, no problem. That's easy to calculate. I'm going to take a look at that pay stub. It's going to be the same week every week. Somebody's hourly, they always work 37 and a half hours. Okay, that's not difficult. 37 and a half hours times whatever they make per hour is their income.
Yeah.
That's easy to calculate. And those are easier pre-approvals to issue because you get that pay stub, you see exactly what it is. No problems there.
But
yeah, exactly. Somebody's got overtime. Somebody's got nurses are big with differential pay.
Bonuses.
Yeah, bonuses, per diem hours. I mean, any number of things, commissioned income.
And then if you throw a part-time into that mix.
Oh, sure. You throw a part-time job.
You got to make sure
mix.
that they're long enough, they're part-time, the income is consistent.
So we're looking at a full 2-year history and saying, hey, what's the historical income that this person is
That's
taking,
the key word.
right?
Historical income.
Exactly.
It has to be something consistent for the last 2 years.
Have to see that's consistent in the past, and have to see that it's likely to continue in the future.
Yes.
So that's the pre-qualification process. Now, 22 years ago when I started in this business, that process was pretty manual. That process was pretty manual, going out there and grabbing every single one of those W-2s, maybe reaching out to the employer directly to get a verification of employment.
Jogging my memory.
Oh, right.
Creating all those
yeah.
verification documents.
Oh, it's a lot.
Employment,
it's a lot of work.
rental, you name it.
Yeah, I mean,
bank deposit.
It's a whole lot of work. Nowadays, it's a little bit more automated. I mean, on half, if not more, of the people that call up, as soon as I get you into my system, click a button, I'm going out and getting from one of the agencies, the credit report, having employment verification documents, income verification documents. We're hooked up right into the network of all the banks around the nation, where you go and you put in your credentials. We're pulling in your bank statements. You're not having to go grab those things for me anymore, like you were in the old days.
The old days,
Not that some people don't still.
Even in the old days,
available.
Even in the old days, you could still grab it. They still have to provide it with a verification of deposit and assets.
Yeah, yeah.
The teller or the branch manager have to sign it, verifying that.
Sure.
Even with the savings books.
Yeah. Oh, absolutely.
I remember those days.
Oh, yeah. They could get a copy of all the pages and get it signed and all that good stuff.
Yes.
Yeah. No. Absolutely. I mean,
it's nice to hear about the automation.
Yeah, the automation is pretty cool nowadays. I mean, you can speed up the process so quickly because there's just so much. Does that snap come through too loud on this?
No, that's perfect.
Snapping through. All right.
Yeah, you make me think like you're the genie from Aladdin. You know.
There you go.
So. Back to the assets, the deposit type. Even though you're doing a pre-approval, you're going to look through the bank statement, so looking for the consistency of deposit, looking for anything that is over a certain amount. Maybe it's not a direct deposit. Where did this money come from?
Sure.
And how long it's been in the account. And then you're looking at how they spend that money.
Sure.
Because sometimes even the person may not have child support taken out of your account, out of your pay stub. It may be coming out of the bank account.
Yeah.
So you're going to look at all those kind of things to look at the consistency of the deposit.
Yeah.
Because you don't want to run into a mystery money.
Oh, absolutely. Yeah.
At the end of the day, they're going to have the reserves.
So you've got a few things that you're looking at. So people who are out there right now that are thinking about buying in the future, in the near future, even 6 months, 9 months, 12 months from now, want to start preparing for that, right? So we're looking at bank statements for exactly what you said. Are there any large deposits in there? Because money that's yours when you go buy a house, that's the best type of money to have, which is your own money, right?
Your own funds.
Right, your own funds. Gift funds, there are programs that allow for you to get a gift from a relative or from
under certain circumstances,
Yeah.
but they still have to provide the bank statement just like you.
Yeah, absolutely. And there's a whole thing of documentation that goes into all that, and that's probably one of the hardest things to document are the assets in a transaction. But we're looking at things. Like that. If it's your money, that's awesome. But we're also looking at deposits. Are there any deposits that are more than normal deposits? Your payroll deposits, and where'd that money come from? Is that extra income you're receiving? Maybe that's a second job. Maybe it's a third job. Maybe you just received a gift from somebody, but we didn't document it. Now we have to. We're looking at on the other side. We're looking at non-sufficient funds. So are you bouncing checks? Are you going into the negative, right? That is not something that shows up in your credit report, but shows something about your ability to manage your money. Yeah.
So that is part of the pre-approval. Not only the difference between a pre-qualification and pre-approval, but it's looking at the bank statements.
Yes.
Looking at how they manage their money.
Yeah.
Because I know you said non-sufficient fund, but it didn't actually click until you start explaining it now.
Yeah.
So, and then you're looking at the total balance, making sure they have sufficient reserves.
Yeah.
Wait, let me back up because I missed something. Before they go to buy a house, this is the preparation stage. You got 2 months. You got 30 days. You got 60 days. So it is your responsibility with those 60 days to make sure your bank account is up to par.
Yeah, I mean, we want to see that somebody is managing their money properly, and we're really only taking either, depending on the program, either a 60 or 90-day snapshot of you when it comes to your bank statement. Your credit report's different. Your income is different. We're looking at that full 2 years. The credit report, we're looking at all the details of your entire credit history.
Yes.
Right? So, but the bank statement is something that we're looking back either 60 or 90 days. There's even some programs, a lot of the first-time homebuyer, most of the first-time homebuyer programs have income limits. So not only do you need to make enough to afford the house, but you can't make more than whatever the income limit is for that specific
That depending
program.
whether it is a down payment assistance from, let's say, MHP or Mass Housing,
Yep.
or probably from another bank who says that, you know what, we are going to do this for this income range in the community.
Yeah, absolutely.
So-
Absolutely. So one of the biggest ones here in Massachusetts. So we're obviously right here on the border of Mass and Connecticut.
Connecticut.
One of the biggest ones here in Massachusetts is the Mass Housing Program.
Yes.
That Mass Housing Program's an awesome loan, but there are income limits to it. So you have to make enough to afford the house, but if you make over the income limit for that area where that house is located, you wouldn't qualify. So we're actually looking at bank statements.
Is
to
that
see.
per family member or per total of household?
Both, depending on the program. There's actually a couple programs.
Okay.
One would be a household income, meaning anybody in the household above
18
18,
yeah,
that's
18
making
over.
some money. The other one would be literally just whoever's
Just
the
a borrower.
borrower on
Yes.
that loan. So bank statements tell us a lot of that stuff. The bank statements show us if there's a second job in there that maybe it's not being reported. At the end of the day, what I always tell people is, listen, we're here to help you get a loan, right? And so when you're talking to your loan officer, you want to be 100% throw it all on them. Their job is to figure out what loans they can get you.
Yes.
Because frankly, you do have some people who for whatever reason maybe feel like, maybe I shouldn't tell them about that, or maybe I shouldn't tell them about this. It's a full undressing, man.
Full
Yeah,
disclosure. Full disclosure.
The underwriting process is a full undressing of financials.
Disclosure.
Yeah,
you have
so-
to tell people.
Yeah, tell us up front. We'll figure it out from there. And if not, it might not be that you can't get a loan because of a detail or something. It might just be that this specific loan isn't the one for you. So we got to put you into a different one. And that's part of the pre-approval process too. Really, is you come into me, you have no idea what loan programs are available.
Excuse me.
Yeah.
Some people do know what they
Sure.
want.
Sure.
They know
yeah.
what they want because they see it.
Yeah.
But once you start explaining to them,
Yeah.
they'll be like, "Oh, like
Sure.
a deer in the headlight."
Yeah. No,
Oh.
hey, listen, people will call you up and say, hey, I want an FHA loan. I've heard about these FHA loans. It's a federal loan. It's a great loan. They're not wrong. It's a great loan, but depending on your situation, there might be a better loan, right? Some people might call up and they scraped together their last penny to get 5% to put down on their loan. Okay, well, you could put down that 5%, but do I really want you walking into a house with no money in your pocket? Right? I'd love for you to have some leftover money, what you keep referring to as reserves, right?
Yes.
That leftover money in your pocket, and I might introduce you to a down payment assistance program that you didn't even know about.
You can leverage the cash that you have.
Yeah, absolutely. So now you're moving into that house, and instead of spending your last 5, 10, whatever amount of money you have in the bank, instead of spending that $10,000,
People get confused with that.
it's now in your bank account, and now I'm getting you that $10,000 as a down payment.
Brad, people get confused with that because they think that because they're going to get 100% and you hear somebody else get 100%, they want to come to the table with no money in their pocket.
Yeah,
They're supposed to come with the money to the table
yeah,
and let the table decide whether or not you can get 100% or not.
yeah.
Because you have to have an investment into this.
Yeah, well, for sure. I mean, you're definitely going to walk into a house with some money out of pocket. But there are, believe it or not, some programs through a combination of down payment assistance, or depending on the areas that you're looking in, there could be 100% financing programs available through something called like USDA for rural housing.
Rural housing.
Something that's a little bit outside of the 91 quarter, I say, right?
Amherst.
Well, not even there, but it's got if it's west, if it's east, or or
Yeah.
whatever. I'm backwards here, but hopefully this is reversed.
Yeah,
on the video.
it's same thing.
So, anyways, east,
Same
west,
direction,
who
left,
knows?
right, left.
I don't know, whatever. So, there are some programs you can get into a house as a first-time buyer with very little out of pocket.
But I would still recommend people.
Yeah.
Because it's a 100% program means that you're going to just start looking for a 100% program without even having money. You got to bring money to the table.
Yeah, you want people to have skin in the game.
You got to have the reserves.
Yeah.
You got to have the money for the deposit for the contract.
Sure. Yeah.
You have to have the insurance, the appraisal, the home inspection.
Yep.
You know,
You're spending some money.
You got to have some money. You know, so and then maybe the seller may say, you know what, I don't want to pay anything to the closing.
Then you gotta spend some money. Yeah.
So that I wanted to think, well, I can qualify for 100%.
Yeah.
Yes, you can.
Sure.
But what about these other things you're responsible for? Isn't that 100%? No, it's not.
Yeah. So part of the pre-approval process, literally, as I always say, there's three numbers we're really highly interested in, and I want to make sure you understand when you're getting pre-approved, right? So number one number is going to be what's my payment going to be, right?
Yes.
So that you need to understand
Affordability.
exactly what your payment is. Yeah. Can you afford that? I might be able to qualify you for, $2,000 a month, but you're only comfortable with $1,400 a month.
Yes.
Right? It doesn't. I don't. You need to walk away with the pre-approval knowing what's going to get you that second number, which is your price range, right?
Yes.
What's going to get you that $1,400 a month? If you just called me up and I said, David, I can get you approved for $350,000, you go away and you're like, this is great, but you have no idea what that means.
The payment is going to be.
And then all of a sudden you come back to me with this house for $300,000 and I'm like, all right, that's awesome. Congratulations, man. That payment's going to be $2,000 a month.
Give you all the documents.
Whoa, I can't afford that, right? So when you walk away, you want to know three numbers. You want to know, what's my mortgage payment going to be? What price range is that correlated with? And then the last one is going to be, how much money is it going to cost you out of pocket total to buy this house, between whether it's down payments, closing costs,
appraisal, home insurance,
home
the whole
inspections, everything, right? You're buying a house with oil, right? You're buying a house with oil. You have to buy the oil from the people that you're buying the house from, that's sitting in the basement in the tank, right? We literally discuss all that stuff. So you leave that pre-approval process with an understanding of, how much is it going to cost me a month? Can I afford this? How much is it going to cost me out of pocket? Right?
Yes.
Do I have enough money to complete this transaction?
And your price range.
And then your price range. Those are your three real important numbers. And if you get pre-approved and you don't understand those three important numbers, and we're not given the time with your loan officer, you either need to call them back, or you need to go find another loan officer and talk to another loan officer who's going to educate you on those things. Because without that, you really don't know what you're shopping for.
I'm glad you said that, because with a loan officer, just like the real estate agents, what they're doing nowadays, they do an assessment to determine. That assessment is very important for the pre-qualification and the pre-approval process.
Yeah.
Because the pre-qualification opens up the conversation. And you start talking to the client, well, I can tell you how much I make. I can tell you how much I have in the bank. I can tell you what I remember about my credit score, and you open up the conversation. Well, this is what this is what your payment is going to be. This is what you could possibly pay out of pocket, and this is what your price range could be.
Yeah.
And then you start talking further. You know what? You make sure that you have to have your last 2 months bank statement. Make sure you keep your accounts up to date. You don't have no return checks, which is non-sufficient fund. Make sure you don't change job. Make sure your job, you talk about all these things, because the pre-qualification stage opens up the door to have this conversation.
Yeah.
Because you can feel talking to the person,
either
in the tone of the voice, the body language, the facial expression. You'll be able to advise the potential client, potential borrowers, on what to look forward to.
Absolutely.
So
you want to know you want to know what to expect.
And we haven't even touched about the pre-approval when it comes to people that are self-employed borrowers.
Oh, they're fun.
That own their own job.
Yes,
their own job.
Yeah.
Well, not only their own job, even the 1099 workers.
Sure.
And they do a Schedule C, individual contractors. and people that have your sole proprietorship, maybe an LLC or corporation.
Mm-hmm.
So that's a whole different ball game.
Oh, sure. We're going through those K1s, the 1120s,
The 1065s,
1065s, right? I mean, there's a lot. You know tax returns pretty well, so.
Well enough.
Well enough, exactly.
When they start asking me for the complicated stuff,
Yeah.
I claim amnesia.
Yeah.
I go to the basic.
Yeah.
I do the basic. I don't do all a bunch of I don't like it make my head. I feel like I have a hangover and I don't even drink.
No.
But basically, well, again, we're at BuyingMiCasa.
Mm-hmm.
You're with Brad Salerno.
Yes, sir.
And you are
Still.
You're still the Brad and only honored guest. So Brad is with Guarantee Rate, and he's the vice president of mortgage lending.
Yes, sir.
Good, I got it right.
You did. You said it's going to be
Vice
tough
president.
to remember the title.
Yes. And
The
my
name you got, because you've been saying that one for many years.
Man,
but the title is tough.
I have called my girlfriend the wrong name.
That's a problem.
I even called my daughter, my grandson, the wrong name.
Well, you can get away with that easier than a girlfriend.
So, but it all comes with age.
Yeah.
So, Brad, why don't you give me a quick recap?
A quick recap.
Yeah, what
All
we
right.
talked about.
Listen.
Usually I do it, but
All right, I'll do.
I want
So
the
we're
listeners to
talking
hear
today
your voice.
The difference between a pre-approval and a pre-qualification. There we go. Right.
Yes.
So it's about certainty. It's about surety. It's about documenting everything you say. It's not just your word. It's collecting documentation. And when you leave your pre-approval, you need to know how much money that's going to cost you per month, what price range we're talking about that's going to cost you that much money per month, and how much money is coming out of your pocket. With those three things, you can confidently go out there and go find a house.
Especially with that letter.
Exactly. You're getting issued that letter. You can go out there with those three things and confidently go find a house and know exactly what you're getting into, right? Eyes wide open. We want people this is a big financial step. The biggest financial transaction you're going to have in your lifetime, right? And maybe you'll do it once, twice, maybe 3, 4 times. A lot of people only do it once, quite frankly.
And they're still in that home.
And they stay in that home for years and years and years. So you need to go in with that with eyes wide open, and you need to make sure that whoever you're working with as a loan officer, right, is educating you and giving you the information
be able to explain to you.
Yeah, so you can confidently go out there and get a house.
And the thing is not selling, it's educating.
Absolutely.
So a pre-qualification is hearsay, word of mouth.
Yes.
From me to you to me. A pre-approval is verification.
Yes.
Documentations, the hard facts, and you're able to go through it and verify it, including pulling credit.
Yes.
Because people have that misconception. Sometimes some loan officer that don't have the necessary experience, they say, well, we pre-qualify, you can go and look for a house. You can go to the real estate and give them a pre-qualification. It's pre-approval, that's what you need.
Yeah. I had somebody shopping for a house the other day. They called me. They had a pre-qualification in hand. They were shopping for a house. They called me. They didn't even have a job. But they were pre-qualified because they told them I'm going to be getting a job sometime next year. And
you know what?
Listen,
I love these stories.
It's crazy.
Do you know that we need idiots?
I guess so.
We need idiots in this world. Without idiots, we won't have a job.
Yeah, sure.
There was no fun.
Yeah.
We need idiots in this world.
I guess so.
How could you, but anyways, I don't want to go down that road because that can get
really,
really.
It's a fun road.
Yeah,
Some
yeah.
of the war stories are fun, it's interesting some of the things you run into. So,
but Brad, it's been fun, Brad.
Yeah, absolutely.
It's always been fun, working with you and with Steve.
Yeah,
it's been always been fun.
Yeah, likewise.
So, Brad, I'd like to thank you for coming here to be a guest speaker with BuyingMiCasa.
Thank you, sir.
And know that you're working for Guarantee Rate, and you're the vice president of mortgage lending.
Still.
All right, I got it. This time I didn't forget. So, Brad, the next time I invite you, we talk about another topic which is very important regardless of mortgage business.
Yeah.
So, one of the most important things for these prospective home buyers is to get an education. go to the first-time home buyers program and get your foot in the door.
Sure.
And then have a conversation with the banker so they can understand the difference between a pre-qualification and a pre-approval.
Yes, sir.
Thank you. And I think this is all for now. Until
right.
next time, Brad.